Trade receivables. What is a trade receivable? Why do we care? What's important here? Well, do I care? Yeah, I care. I care. I hope you care as well. What's a trade receivable? Well, a receivable is something you're owed. It's something that someone owes to you. And well, trade, that means it's from operations. So this is really just accounts receivable. Just to clarify, because a note receivable, that could be an IOU for a non-operational reason. Trade receivables, these are going to be because of your operations, right? That's what we're going to see. Now let's kind of dive more into the learning objectives for today. I'm blocking it. I cannot block the words. I want you to be able to read it. All right. So what are our learning objectives? We're going to calculate trade receivables and allowances and prepare journal entries. Pretty straightforward, right? We'll dive into that more in detail. We're going to prepare any required journal entries to record the transfer of trade receivables. We're going to dive into what secured borrowings, factoring, all of those items are, right? It's an asset. So you could sell it to someone else, you could lend it, you could borrow against it, just like you can your car or a bank account, investment account, something like that. We're going to prepare a roll forward of trade receivables account using various sources of information, basically just a base formula, and we'll see that soon. And lastly, we're going to reconcile and investigate differences between the subledger and general ledger for trade receivables to determine whether an adjustment is necessary. Let's dive into all of those wonderful points, right? The numbers, the nitty gritty. I'll walk you through it. This should not be too mind numbing. I want to make sure that you are in a good spot for the exam.